The reason that we look at the cheat sheet is to get one step ahead of the news. If you were looking at yesterday's price action, you saw that we had broad-based declines across the board. With the cheat sheet, you already knew that this potential was on the cards and you had already prepared yourself for it. In this video, I'm going to show you how you can get ahead of the news and it can make you an absolute fortune. Let's run the numbers. A lot of people simply don't understand how financial markets work. And that is extremely fair because the institutions will not tell you. The first thing to understand, markets are not isolated. Smart money rotates capital across asset classes based on structure, volatility, and macro factors. For example, if the DXY comes down in the Forex market, that typically puts upward pressure on crypto and upward pressure also on stocks. The easiest way to think about it, all the 5 financial markets are orchestrated by risk. Your chart that you put money into or your money charts are somewhere buried in the orchestra players. So many people just pick out one particular instrument and literally it is a financial instrument and they say, I'm just going to listen to this thing. It's in an orchestra, people. That's going to be really difficult to do because all the other orchestra instruments, and don't forget they are instruments like financial instruments, they're going to override your money chart. Therefore, you need to listen to first the conductor. And who is the conductor? The thing to understand, the orchestration rows are row 1 and row 2. Literally, there's not a single conductor inside financial markets, there are multiple conductors. But primarily, if you were to look for one orchestra leader, it's undoubtedly the VIX. Now, what we're going to do in this video is to go through the cheat sheet. The cheat sheet is your guarantee to understand financial markets in front of the news. And I'll show you exactly what I'm talking about. We'll also be looking at the structural levels on these specific charts, and you can either draw up the structural levels yourself or you can get them through the service. And the service covers off all of the cheat sheet structural levels. It will literally save you days of time. And if you go across to the CTKSmethod.org website, down here, your cheat sheet to mastering price action, you can download it absolutely free of charge. Okay, let's get into it and let's see what these different rows are telling us in front of the news. Let's have a look at row 1, which is the VIX, the US dollar currency index, dollar yen, the 10-year, the 2-year, and oil. What did we see recently? And we've been talking about this for quite some time. The VIX has been basing. Now, what does it mean, basing? Basing means that after a prolonged downtrend or a prolonged uptrend, it's starting to flatten out. Now, these arcs generally cause reversals. Now, when we get a reversal in the VIX, and what is this blue line? This blue line is Bitcoin. Why are we putting a blue line, Bitcoin, across all of these charts? Because Bitcoin is the most risk-sensitive asset class in existence. Now, why is that important? Well, you can use it. You can use Bitcoin to understand where financial markets are either going risk on or risk off. Now, what is risk on? Okay, I'll show you. Risk on behavior means that the VIX is coming down and risk is coming into the market. You can tell when you get these surges, that's called risk on behavior. This is called risk off behavior. And you would have noted that the stock market also came down in the past session. Why? Because the basing VIX broke out, and we've been expecting this for some time. In other words, we were in front of the news for a long time. We already knew that this could happen, and it's not surprising, it has happened. What we also saw is the US dollar currency index, the DXY, coming up. Now, what does that mean? It means also that the 10-year and the 2-year yields will come up. Why does this matter? The 10-year is like your interest rate for your mortgage. The 2-year is like your interest rate for savings. The difference between the 10-year and the 2-year is the profitability of the banking system. Literally, the banking system makes all its dough, all its moolah from just taking your money and lending it to other people. And we also saw that risk-on behavior in terms of oil has been decreasing. We've noted that oil is very geopolitically sensitive, just like gold is. Now, the key thing to just keep your eyes on, if you want a very simple introduction to row 1, just keep your eye on the VIX. Everything tends to come back in here like this. It'll take you a bit of time to understand, but keep your eye on the VIX. If you're totally invested inside the stock market and you're not looking at the VIX, that is a really, really bad idea, because the VIX will tell you how global markets are pushing ahead or just falling behind. Now, why is this the case? Because the US markets are the most heavily capitalized financial markets on the planet. They control every other market. Let's have a look into row 2, and this template is from the Profiting course, which is a spectacular thing if you want to actually understand what you're doing, which are junk bonds, the euro dollar, the Aussie dollar, gold, silver, and copper. What we've noticed, junk bonds were going for it. Now, what is row 2 all about? It's about risk on. So if the charts are coming up, that's risk on. If they're going down, guess what that signifies? Well, it signifies risk off. Ay caramba! And what did we see in junk bonds? Yes, that confirmation. Risk was coming out of the financial markets because junk bonds was coming down, the US dollar, dollar yen was coming up, the yields were coming up, oil was coming up, junk bonds was coming down, the euro, the Aussie dollar was coming down, gold's kind of wavering a little bit, just seeing some detection of geopolitical risk enter into the equation. Also, we're seeing baby brother of gold, silver, is registering the same kind of action. Don't forget, we've zoomed out. We're seeing quite a degree of price history and intercorrelation with this particular data set. Coming back to the analogy idea of the orchestra, the CTKS cheat sheet allows you to isolate financial instruments and listen to the story that they're telling you. And it's really important because look at this, literally 5 days ago, junk bond said, ooh la la, I'm coming down. And that was confirmed by Bitcoin. Why? Because the VIX was basing and ready to rumble. If you're inside the stock market, looking at row 3 is really, really important stuff. Now note what happened with Bitcoin. Bitcoin just came up, peaked, and sold off. And what did the S&P 500 do? It sold off as well. What about the Nasdaq? It sold off. What about the Dow? It sold off. What about the Russell? It sold off. Literally, global indexes were all selling off. Why? Because risk off is on the agenda. What typically happens is people will look at their chart. Let's make it practical. Let's just go to row 4, which is Apple, Microsoft, Tesla, and Nvidia. Also, strategy is in there. A lot of people will just look at the chart that they put money into and they'll say, I don't know why it goes up and down. Why is it going up and down? I just don't get it. Why did Tesla just drop off the cliff? Oh, it must be something to do with news. Well, news does play a part, but the market cannot escape all of that intercorrelation and interconnection. What about Microsoft? Oh, that came down as well. What about Nvidia? Of course it came down. Why? The VIX was coming up. Why did Bitcoin come down? That blue line in the background, of course it came down because of the VIX, row 1 and row 2. You can just think, row 1 and row 2 just confirm each other. Just think about the VIX as the conductor of the financial market orchestra. Now the key question is, why does the VIX base and then take off? The answer is, it's all about structure. When you have a lot of underpinning structural support levels, that means the price, even though it comes down, will find buyers in order to go up. it also works from the other direction. It's very important to understand CTKS gaps. Gaps exist between structural levels. They're very different from discontinuous price gaps that are typically defined as the word gaps inside the stock market. One thing to understand, when you have a lot of structure together, either when price, just say price is here at this particular point and you've got a lot of CTKS structure underneath. CTKS structure is the most advanced technical structure in existence. And if you would like to find out more about how to read it, you just go to the Price Action Masterclass. It is a ripper. Always keep your eye open for these CTKS gaps. A lot of people say, oh, it gapped up or gapped down because of the fact that the stock market doesn't trade 24/7 like the crypto market does. Those gaps are actually caused by CTKS gaps, which are literally structural absences. If you're only in the crypto market, and a lot of our people are in the crypto market only, you really need to look at row 1 through to row 4. It's absolutely vital. You can see that Bitcoin, just in that little blue line, in terms of crypto market cap, this is all row 5. So we're looking at crypto market cap, we're looking at Bitcoin, Ethereum, and we're trying to determine how things are moving around. We know the VIX spiked up, junk bonds came down, and ooh la la, of course Bitcoin came down. And the entire crypto market came down. We can see Bitcoin coming down here, total crypto market cap. And what about the components inside the crypto market? If the entire crypto market is coming down, do specific projects do something different? Well, a couple of them can, but they cannot escape this gravitational pull. They will be pulled in the direction of the main market. That's why you always read the structural levels on total and Bitcoin together. Now, we were talking about gaps, so let's just go for that gap idea just a little bit more. Let's turn on the indicator, and so this is from the service. So what you see is the totality of the crypto market had structural support, came up through this positive CTKS gap, got whacked on the head because of all these sellers, and it's right back to where it was a couple of days ago. And that is the behavior of gaps. They can move when you've got a positive, and they can move down because you've got a negative. For example, if you're right here, price is just printing above this structural support and it goes up into structural resistance, that positive CTKS gap just got filled. And guess what typically happens? When a positive gap gets filled, the negative gap fill is not far away. Okay, that's pretty cool. Let's look at Ethereum structural levels, and again, this is from the service. You can get all the structural levels from all of the charts. It saves you a tremendous amount of time. So we saw Ethereum here had a lot of structure, and I put out an example trade yesterday, and there was a guy that put $12 million into just shorting Ethereum at structural support and got whacked. Of course he got whacked because all of this structure actually counts for something, and we can read it ahead of time. In yesterday's video, I sold Pepe right at the top there because there was structural overhead resistance. And what has Pepe done since? It came down. If you understand how markets work, you can do incredibly well, but you have to understand this intercorrelated and interconnected structural connection between charts. It is absolutely compulsory if you want to move from consistent losses to consistent gains. That is literally the welcome mat to profitability and the life of your dreams. Let's drill into Bitcoin and see what it's currently up to. Bitcoin is currently 108.096. We can see that 107.540 we have structural support. We had quite a few levels of structural support when the price was up here, and they've since turned into structural resistance. Understanding the play between structural support and structural resistance is really important. Why is it important? Because these CTKS levels, also called SLs or Stanfield levels, they identify where smart money is going to come in and push price down, or smart money is going to come in and support price. And we can see it all the time, in real time. I've shared a couple of trades just recently to help you to understand that even though the markets have been coming down, you can go long at spot and still do really, really well. But you must enter the house of consistent profitability, which means that you must understand structural intercorrelation and structural interdependence. I talk about those at length in the Profiting course. And I'm not here to sell you the course, I'm here to help you. A lot of people just don't understand how the markets work. And after 4 decades in markets, putting real money into the market, I can tell you how they work. A lot of YouTubers don't trade and don't trade effectively. They literally could not make money in a downtrend going long at spot. You can. The key is to just understand structure. Now, when we look into row 6, which is Litecoin, Bitcoin Cash, Binance Coin, BNB, and Ethereum Classic, we can see that Bitcoin is controlling the fate of all of these alts. Bitcoin just moves the alts in the direction that it is going. We can see a degree of basing action coming out of Litecoin. We can also see Bitcoin Cash is starting to come up. This is really positive for the crypto market and for risk, because Bitcoin is measuring risk. And when we look structurally on Binance Coin, BNB, we can see the areas where we know ahead of time what structure is going to do. And this is vitally important. If you know where the sellers are going to come in, well, you can see right here, and this is literally real time. This is a 5-minute chart. You can see the sellers were inhabiting this structural level and this structural level here. So structural support up into structural resistance. If we can't get above, we're going to the level below. And it's that easy to read where your charts, where your money charts are going. All of the structural levels have been released, and when in the crypto market, when we look at row 7, which is Cardano, ADA, Solana, Sol, Dogecoin, and XRP, what I wanted to talk about here is following versus not following. You can see ADA is following the up and down movements to a ping on Bitcoin. Now, how do I see that? That might be a little bit light for you to read. So I'll just up this, just do this, and you can see quite clearly that ADA is following Bitcoin. Now, why is this important? Well, Bitcoin will move 0.01% in either direction, and ADA will move 10 times that. If you don't know where Bitcoin is going and you're investing solely in ADA, I would suggest please look at Bitcoin. Now, we can see the same kind of behavior on Solana, just a little bit weaker here. The same kind of behavior on Doge. But what I wanted to push out to you is this concept on XRP. Notice that XRP came down pretty hard. It wasn't managing to just follow like the other cryptos do. And this is a characteristic of XRP that you need to be aware of, because I know a lot of members of the community actually trade and invest in XRP. When it's pushed down, it will do this kind of mean reversion thing and then get back on track. In other words, XRP is really explosive, but it can be very implosive as well. Therefore, returning to this news, we know, of course, that the major market indexes came down to where we must understand the structure of those. We also understand that the 10-year, the 2-year, and the VIX raised up. Of course they raised up, because the VIX has been basing, and it kicked. And it caused all of this sell-off, not just through the major market indexes, but the crypto market as well. You're going to have a lot of influencers out there saying, I don't know why things sold off, and then they'll smash desks and destroy monitors, and if only they had actual knowledge. If you're liking the content, please smash that like button, and if you're not subscribed, please subscribe. You're going to gain tricks and tips that are going to put you in front of literally 95% of people inside financial markets. And if there's something that you would like me to talk more about in terms of intercorrelation, interconnection, or any of the cheat sheet components, please let me know in the comments. I would love to help you guys out, and I hope that little bit of a discussion on gaps will assist you, and there's going to be a more extensive discussion on gaps inside the service video for this month. Please keep your eyes on the structural levels of total crypto market cap. It's particularly important at the current time. We've seen some bounces, and that's literally because the entire crypto market came into structural support and it reacted. If it keeps on reacting here, we've got a positive CTKS gap back to these levels that we were at previously. Keep your eyes on total crypto market cap structural levels. It's very, very important at the current time. Remember, the VIX has been basing. If we get more upside action in the VIX, and that's going to depend on the VIX's structure. And I can talk about that more in tomorrow's video. And members of the service, you already have the VIX structural levels, so you already know. And if you haven't done so already, please make sure that you pick up your cheat sheet to mastering price action. It's a literal game changer. And it's available absolutely free from ctksmethod.org. You'll find a ton of free information there. Links are in the description of this video. Bye for now.